Good afternoon, ladies and gentlemen who are with us in person and those online. I'd like to welcome you to the launch of the Cygnus Credit Investment Additional Public Offering. My name is Greg Samuels from Cygnus Capital, and I'll be your host for this evening. And since we are running a little behind time, without any further ado, I'd like to invite Mr. Beresford Gray, CEO of Cygnus Group, to bring opening remarks and to bring this evening proceedings to an official start. So, Mr. Beresford.
Greg is a very tall guy. So, ladies and gentlemen, good afternoon, members of the media, shareholders, prospective investors, colleagues from Sygnus, our lead arranger, lead brokers, NCB and Sagicor, and all our selling agents. Good afternoon. This is a very exciting afternoon for the Cygnesian family and for Cygnus Credit Investment shareholders in particular, as we take another big step in our effort to grow and expand the alternative and in particularly the private credit market. Cygnus Credit Investment, as most persons or most investors would know, has pioneered this industry and is the leader in private credit and focuses primarily on investing in medium-sized firms across the Caribbean. Over the last 3 years, the firm has experienced significant growth, and Jason will talk a little bit about that. And we have expanded our footprint throughout the Caribbean, operating in, I would say funding businesses in at least 7 countries across various sectors. And we have clearly established great stewardship of investor capital as well as an history of profitability. As a consequence of that growth, and in order to sustain that growth, we are very pleased to launch our additional public offering, where we will be looking to raise 22 million US equivalent in J, with the ability to upsize to 32 million. Jason will give some details on that, but I need not say that this is an extremely important opportunity for shareholders and new prospective shareholders to take part in a growth story and to be a part of a tremendous effort to build an alternative channel, a channel through which medium-sized firms can access financing on the one hand, and through which investors can realize significant growth in their investment on the other hand, as well as consistent dividend flows. So without going any further, I just want to welcome you all. Enjoy the launch, and we will provide a lot of details on this extremely exciting offering. And we will look forward to taking all your questions and adjusting them. Thank you very much.
Thank you very much, Beresford. Let me just give you a brief introduction to the person sitting at the head table. So to my far right, Mr. Herbert Hall, representing NCB Capital Market, who is one of our joint lead broker. Beside him is Mr. Jason Morris, Chief Investment Officer of Cygnus Group. Beside Jason is the rose among the thorns this evening, Mrs. Mishka McLeod, who is the Vice President of Sagicor Investment Limited, who represented the other joint lead broker. And of course, Mr. Beresford Gray, CEO, who just spoke. So, at this time, we'll ask Mr. Herbert to come and give us an overview of the offering process. And immediately following Herbert, Jason will come and also go into detail about the offering and some of the good things that Cygnus Credit Investment has been doing and will continue to do. So, Herbert.
Ladies and gentlemen, good afternoon. Mr. Master of Ceremonies, Herbert Hall is the name, sir. All right, ladies and gentlemen, good afternoon. Those who are here with us physically and those who are joining via the various social media platforms. Now, I would really and truly like to say congratulations on behalf of NCB Capital Markets on what is sure to be another successful offer of SCI or by SCI. We at NCB Capital Markets, we are no strangers to assisting companies with raising funding, be it debt, equity, quasi-equity. And what we're particularly proud of is the fact that we are able to do this in a COVID-resilient manner using our platform, our Go IPO platform. And this has become extremely important because of the COVID pandemic. So investors near and far are able to log on to our platform from whatever device they choose, and they're able to participate in an easy, seamless way. And one of the beauties about the platform is that you get your notification as you go through the process and as your application goes through that process. So wherever you are across Jamaica, the diaspora, or further afield, this is an opportunity to participate via our Go IPO platform. So, ladies and gentlemen, you will hear the numbers, all right? And you will hear the company's projections from Jason, and of course, the performance of the stock that would have been previously listed. And it goes without saying that SCI is a good option, and for you to pretty much level up for the year ahead. This 2020 has been one of the most earth-shattering ones, and I'm sure that your investing potential and and certainly the stewardship of a company, SCI, has been a good one, and we all need a break, right? So just let us log on to the Go IPO platform. Right, it's very easy to use, very intuitive. If you are already a client of NCB, it is easy for you to fund. Otherwise, you just have to wire your funds, right? But it's very easy to use. So, again, on behalf of NCB Capital Markets and the entire management team, I would love to say congratulations again to SCI, and to your investors, welcome again to the launch. Thanks.
Thank you very much, Mr. Hall. So I used to call in Herbert Herbie, so a little tongue twister there. I almost said Mr. Herbie. Okay, so Jason, over to you now to walk us through some of the good things about SCI and why we should consider buying such an attractive offer at this time. Over to you.
Okay, thank you very much, Mr. Chairman. Good afternoon, everyone. Hope you can hear me clearly. remove it. Okay, so we are here this afternoon to discuss Sygnus Credit Investments Limited additional public offer. We are providing both existing shareholders and prospective shareholders up to 32 million opportunities to invest in growth and recovery across the Caribbean region. The size of the transaction, 22 million US dollars, equivalent to 3.3 billion Jamaican dollars, with the option to upsize to 32 million US dollars or 4.8 billion Jamaican dollars. So why are we making this offer at this time? Well, Sygnus Credit Investments Limited has been a great steward of shareholders' capital. And thus far, SCI has built up a portfolio valued at 62.3 million US dollars in only 3.25 years. Let me repeat that. In only 3.25 years, SCI's balance sheet has moved from $0 to 62.3 million US dollars. More importantly, however, we're in a pandemic economic environment where the global COVID-19 pandemic has disrupted lives, economies, businesses, everything. However, despite that, SCI has reported audited financial results ended June 2020, and again has reported quarterly financial results ended September 2020, and has thus far had 0 reported credit losses in its realized credit losses in 13 consecutive quarters. So SCI has effectively built up a proactive risk management platform whereby SCI has been able to manage the risk in its portfolio such that SCI has not realized any credit losses up to date. And as we did with the quarterly financial results, as at the end of the September quarter, and as was done with the management discussion and analysis that went with the audited financial statements, SCI does not have any expectation to realize any credit losses, certainly not in the near term. Now, you might be asking yourself, for those who are not familiar, well, what is this SCI that people are talking about, and what is private credit, right? So, 3.5 years ago, Cygnus pioneered what we are calling the private credit industry across the Caribbean. And as you know, Greg would have alleged earlier, SCI is the leader in this space. And private credit is simply SCI effectively taking shareholder capital and investing it in medium-sized companies across the Caribbean using what we call customized financing instruments. What are customized financing instruments? These may be anything that we structure to fit the growth and expansion objective of a company. For example, company A may want to buy company B, and they are seeking financing to do so. And the owners of company A who want to do the purchase have $20. The cost of the acquisition is, let's say, $40. So they have $20 in equity. A bank is going to give them $10, so they are short $10 out of that $40. So clearly, if a bank is already financing $10 and there's $20 in equity, they can't go and get additional bank debt to fill the gap. It's an acquisition. They also can't necessarily go and issue a corporate bond to fill the gap because it's an acquisition. So the person or the company that has the capital that is sitting in a habitat to fill that gap, that $10 gap that you have in an acquisition, just as I described, would be Sygnus Credit Investments. So to provide that capital, Sygnus Credit Investments will get above average yields on its investments. And because Sygnus Credit Investments Limited is solving a real need for a real company, then we can actually generate above market yields on those investments. So that's one example. Cygnus Credit Investments Limited, for example, may also purchase receivables from a company, or Cygnus Credit Investments Limited may enter into a commodity repo structure, which, let's say company X makes widgets and they want to increase their inventory. Sygnus Credit Investments Limited would structure a transaction where SCI purchases the widgets at a discount and sells back the widgets over time. So let's say, you buy 100 widgets up front, give the company all of that cash, and then every month sell back to the company, let's say 25% of the widgets at a 1% markup. So by doing these type of innovative financing structures, SCI is solving a problem that, for example, a bank can't solve, or issuing a bond can't solve. We're actually solving a particular problem that companies that are growing fast typically have. That's the core essence of Cygnus Credit Investments Limited. Now, we are in a pandemic environment, so you might be saying to yourself, well, we are in a pandemic, companies are likely to make losses, and therefore SCI may be losing shareholders' capital. But as we have already demonstrated, we have managed thus far without losing any capital, and we are saying that we don't think we're going to lose any in the near term. Now, how is this being achieved? One way that this is being achieved is by having a diversified portfolio. As at the September quarter end, SCI was diversified across 10 different industries and 7 different Caribbean territories. Why is this important? It's very important because some industries will be hit harder than others. Some industries will actually benefit from the current pandemic environment, while others may suffer. So being diversified is very important, not only by industry, but also by territory, because some Caribbean countries will adopt a different approach from others. For example, Cayman approach was to lock down completely, and they only reopened in September, and thus they virtually eradicated COVID from their country. And obviously they have the financial ability to actually lock down for a longer time than, say, Jamaica. Needless to say, being diversified is important for SCI because we can actually mitigate the risk. Now, one of the most important things that I want to highlight is that despite being a company that is only currently 3.5 years old, one of the promises that SCI made to shareholders in its initial public offering in June 2018 was to pay out dividends consistently and pay those dividends handsomely. Today, we are happy to report that in 2 years, starting with the first dividend that was paid in October 2018, SCI has paid out a grand sum of $3.8 million or 10.9% of the company's share capital as dividends to shareholders. I just want to highlight that number again because we should not take it for granted. SCI, as a 3.5-year-old company, you could literally say that the company is still a startup, has paid out $3.8 million in dividends in only 2 years, equivalent to 10.9% of its share capital. How do you translate this for shareholders who would have come into the IPO? So for shareholders who would have bought US dollar shares in the IPO, over those 2 years of dividend payments, they would have averaged a 5% dividend yield on their investment. Again, USD shareholders in the IPO have earned 5% USD on their shares. And for the Jamaican shareholders, they have actually earned 5.5% in dividends. And the difference in the two yields are currency fluctuations. So we think that going forward, SCI will continue to pay shareholders handsome dividends. The other point I want to highlight, despite the fact that we are in a pandemic environment, is that SCI has actually developed a track record of profitability since inception. Remember, the company is now 3.5 years old, but in the first year of existence, SCI actually reported $1.4 million in net profit. Let me say that again because it doesn't seem as you guys heard me. In the first year, as a startup company, SCI generated $1.4 million in net profit. That's unheard of. Startups normally make losses for the first 3 or 4 years, right? Fast forward to June 2020, the audited financial statements, SCI made $1.97 million in net profit, which was down 3.8% versus the record net profit of $2.05 million in the prior financial year. So let's go and check out what has happened since the audited financial statements. In the September quarter, which is the first quarter post the audited financial statements, SCI actually made $797,000 or a 51% increase in net profit for the September quarter in the middle of the worst pandemic this century. So finally, on this slide, SCI actually has generated $4.5 million in core revenues as at the audited financial statements, and for Q1, September 2020, generated a record $1.3 million in core revenues. So if you do the math on this, you see that SCI is on track to actually exceed by a substantial margin the historical profitability that it has generated. Now we get into the juicy part for shareholders. So we made a promise to shareholders at the last annual general meeting that the next time SCI comes to raise equity from the market, we would give them a benefit. And just as how we made a promise on dividends and have delivered on it, we are doing the same right here. So 80% of the shares of the offer are actually reserved for existing shareholders and team members. Let me just say that again. So for existing shareholders and team members, 80% of the shares are reserved for you. We have 10% of the shares reserved for key investors, and therefore 10% remaining for the general public. Obviously, if the offer is oversubscribed, whichever pool is oversubscribed, then allocations can be made outside of those pools. So what are we presenting here? The pricing of the shares, the pricing of SCI's offer is actually valued at 1.3 times book value. So if you think about book value, think of, the company has $100, and if you were to sell off all the assets on its balance sheet, the $100 worth of assets on its balance sheet, how much money would you get in relation to what you have on your balance sheet? Or put another way, if you look at, generally speaking, firms in the financial industry, whether in Jamaica or across the rest of the world, and look at what book value they are trading at, they are typically trading at a multiple of book value, normally 2.5, 3.5, 4 times book value, right? And the reason why they trade at that level is because shareholders are forecasting that over time, the value of the assets on the balance sheet will increase, and therefore value will increase to shareholders. So when you look at SCI's pricing, which we'll come to in the next slide, you realize that at a valuation of less than 1.3 times book value, you're getting SCI at what we would want to call a pandemic discount. So the shares are being priced extremely cheap relative to other financial firms that exist in the market. Now, in terms of the actual subscription price, for the general public and for key investors, the subscription price is $16.30 for J-dollar shares and 14 US cents for USD shares. And the benefit that we are giving to existing shareholders, they are getting a discounted price where the J-dollar shares are being sold at $14.70 or 12.7 US cents for USD shares. So effectively, existing shareholders get a 10% discount on the offer price, and the general public and key investors actually got a 7.5% discount on the 4-week weighted average price of the shares that were trading on the exchange. The way we arrived at the pricing was to simply take what's the weighted average price of the stock over the last 4 weeks before the prospectus was dated, and then discount that by 7.5% to provide the shares, the price of the shares for the general public and key investors, and then discount that same price by 17.5% to arrive at the price for existing shareholders and team members. Final couple of slides. Subscriptions for the offer, or I should say, you can pre-apply for shares starting now because NCB's Go IPO platform is up and running. You can go on, log on, it's very easy to purchase your shares, or you can contact any one of the 6 selling agents that are available, and those selling agents are Barita, JN Fund Managers, JMMB, Scotia Investments, Proven Wealth, and of course Mayberry Investments. And of course, you have the joint lead brokers, Sagicor Investments and NCB Capital Markets. Again, we are using NCB Capital Markets Go IPO platform, and it's very easy to go onto the platform and subscribe for shares. The offer formally opens on the 18th of December and closes on the 23rd. But you don't want to be one of those shareholders who get left out. So, you can contact your broker to start subscribing today. So, in closing, what is the opportunity that we are presenting? We are effectively saying SCI has been a very great steward of shareholders' capital in its very short 3.5 years in existence. SCI has paid out substantial dividends, one of the highest dividend-paying stocks on the market, and SCI has generated significant financial results, one of the best financial results in the middle of a pandemic. And SCI has a robust pipeline of investments that the capital that is being raised will be utilized to finance. Now, if you think about what SCI is trying to do, if SCI is a leader in the private credit industry across the Caribbean, and as a leader in private credit investments across the Caribbean region, you are being offered shares of a leading company at 1.3 times book value. Now flip your mind back to any company that's listed on the JC or in the market anywhere. If you were able to buy those firms when they were only 3.5 years old at 1.3 times book value, what kind of value would you have created for yourself at the present time? That's how you need to look at this transaction. Final point I want to say is that even though SCI is raising financing to grow organically, which is take the capital and invest it in other private credit investments in medium-sized firms across the Caribbean region, you need to also bear at the back of your mind that that is not the only way in which SCI can grow. In the future, SCI can actually grow through other channels. It can grow through becoming bigger by partnerships, or it can grow by becoming bigger through acquisitions, and it can grow by becoming bigger by entering other markets outside the Caribbean. So when you think about 1.3 times book value, it's a steal. You're only getting this discount once, and that is at the present time. Thank you very much.
Thank you very much, Jason. So you would have heard from Beres in his open remarks, and from Mr. Herbert Herbie Hall, and of course, Jason. So now it's time to open the floor and the line for questions, because I'm sure you have a lot of burning questions to ask any of these persons sitting at the head table as it relates to what they presented and about the offer in general. So the floor is now open. The line is now open. Any questions so far online? Okay, I have a question. And this question is to Herbie and Jason. So I'm an existing shareholder. What is the discount price I'll be getting in terms of percentage, and what price did you use to calculate that discount?
Thank you very much for your question, Mr. Chairman. So, existing shareholders will receive a 10% discount on the offer price, and that price is $16.30 J and 12.7 US cents. Sorry, $14.70 J and 12.7 US cents for USD shares.
I have a follow-up question, sir. So, if I'm not a shareholder now, can I buy some shares now on the stock market, become a shareholder, and still have access to the new discounted price in the offer? How long would I have to be a shareholder for to have access to that discounted price?
Good question again, Mr. Chair. So you cannot go and buy the shares today in the market and get access to the discount price. You would have had to have been a shareholder on record as of November 20, 2020 in order to be classified as an existing shareholder. So if you are an existing shareholder on that date, then the discount will apply to you. If not, you will have to subscribe in the general pool or in the key investor pool.
Question online?
Yes, we have a question here from Horton Richards. You may go ahead.
My question is really with regards to the tax regime changes in St. Lucia, in particular with regard to the IBCs. How does Cygnus actually plan to address or handle that particular risk?
Good question. Good question. So, as you know, Cygnus Group itself actually has a tax advisory business, and we have utilized the expertise that we have in-house and out to devise a structure to mitigate against that, which includes actually having a branch of the manager in St. Lucia. So we are well on our way to actually mitigate against those risks in the future.
Any more questions online?
Oh, yes, I had one more question. With regards to the portfolio companies, given the fact that you utilize mezzanine type financing and you have flexibility in terms of how the structures are created, can you give any indication of the type of covenants that you have in place to protect the overall portfolio in the time like this where there's increased credit risk?
Excellent question again. So, because SCI is a private credit company and it provides flexible capital, and we actually structure from scratch all of the transactions that SCI invests in, we put in various protections, right? So you have your normal debt service covenants, etc. But what I want to highlight is that in many of our transactions, SCI actually has board seats, SCI has board observation rights, SCI has structured the voting rights in terms of whether that be 10, 20, 30, 40%. SCI put in keyman insurance. SCI put in guarantees from parent companies sometimes, guarantees from key business owners. So there are many non-traditional forms of protection that SCI actually has in its contract, which is why, as a private credit investment company, SCI's investments are not like a general loan, or, for example, like a general corporate bond, because we get the flexibility to, at the structuring stage, to put those protections in place. One more thing, in some instances, what SCI has also done is to structure the transaction such that the next 1 year or 2 year worth of interest payments, for example, are actually held in escrow. So there are many, depending on what problem we are trying to solve, many protective formal covenants and other forms of protections that are built into the transactions. And that's one of the reasons why, when you look at what's happening in this crisis, SCI is not, well, the manager is not losing any sleep over its portfolio.
Okay, I have a question from the floor. Go ahead, sir. You can introduce yourself and state your question.
Pleasant good afternoon. My name is Lancel Bloomfield, shareholder. Mr. Chairman, SCI is currently operating in some 7 countries. The capital you seek to raise, will you be expanding to more countries within, say, CARICOM, or will you be consolidating in more businesses in these same countries?
Excellent question. So, SCI is currently looking to expand its footprint across the Caribbean region. We currently have investments in our very robust $40 million pipeline, where we have transactions coming from the British Virgin Islands. We have transactions, so I'm talking about the new ones first. Transactions in other Dutch Caribbean countries. We have transactions in the wider Eastern Caribbean. So, you know, there are 3 or 4 additional territories that SCI is looking to widen its footprint into. And of course, we have transactions that we are looking at right across Jamaica, Cayman, and all the other countries that we currently invest in.
Thank you very much.
Thank you very much for your question. Question online?
So open up. We have a question here from Andrea.
Hi, good afternoon. Seeking a bit of clarity, if you could somewhat enlighten me as to the state of the portfolio, if you could give me an idea of how many of your portfolio companies are actually enjoying the benefit of a moratorium of payments right now, because I see that the receivables have increased relative to 2019.
So the receivables would have increased relative to 2019 because the portfolio increased by 117%. We have one portfolio company that is on non-performing, that's a non-performing investment, and that would have discussed that at length in the March 2020 quarterly report, where that company is in the mining and quarrying sector, to be specific, in the bauxite industry. When COVID came, bauxite industry closed down. We thought it prudent at that time to put it on non-performing, because the portfolio company in question actually has large contracts to draw bauxite and deliver it and get paid per load. So in effect, this company is like a project financing company. So when COVID came and the industry was closed, we put it on non-performing, and we began to look to restructure the actual investment itself, because the collateral that we have, the discounted value of the collateral that we have for the transaction is actually greater than the exposure of SCI's investment. And as you would have seen in the audited financial statements, that's the reason why SCI did not suffer any realized losses from that transaction. Post that period, the economy has reopened, bauxite has resumed, and the company has started making good on all the back monies that it owes SCI, so much so that the last set of discussion we had with them was for them to become regular in the next 4 to 8 weeks.
Thanks, Jason.
Okay, so that's the only company that's having a moratorium of payments.
Yeah, we have only one company that we have a non-performing.
Right, but if they have a moratorium, it wouldn't be considered non-performing now, would they?
No.
Right, that's why I asked specifically for the companies which are enjoying a moratorium.
Oh, okay. So the value of that is probably $1 million US. And this come in various forms. So let me explain. So for example, we had companies who are in the distribution and manufacturing sectors. And when COVID came, these companies actually benefited from COVID because, for example, they are manufacturing water bottles, for example, or distributing items that are required, that consumers really are stocking up on. So their revenues went up significantly, but their inventories were drawn down significantly. Now what happened was the off-takers for these contracts began to lengthen the time that they take to pay. So their inventory, their receivables began to lengthen out from, let's say, an average of 15 days to maybe 45, 60 days. So obviously they would have needed some assistance. So we provided that assistance during the lockdown, and after the lockdown has passed, effectively these companies no longer have a significant challenge because their receivables has now normalized. We also have exposure to companies that are in the construction industry in terms of port construction. Again, when COVID came, obviously revenues would have been impacted, and because there was no passenger traffic through the ports. However, there was still cargo traffic, so they still had a little bit of revenue. So the assistance provided there was for them to pay, for example, on the 89th day of each quarter, rather than, for example, paying every 30 days as their contract would have required. So that flexibility was given. We also have companies where the investment is a pref share, and obviously with a preference share, the dividend that is being paid on the pref share, which is semi-annual, can be capitalized for 1 or 2 quarters. So because this company in particular was actually in the mining industry, in the energy industry, sorry, initially when the country was locked down, again they had some minor issue in terms of their revenue, but that has normalized since. So overall, in terms of the amount of money that we have, that would have resulted in an increase in receivables would have been roughly 900 and something to $1 million US. Hope I've answered the question that you're asking.
And fair enough.
Yeah.
Any more question online? Yes?
Yes. Horton Richards.
Yeah, thank you guys. There's one more question I had, in particular regarding your portfolio companies right now as of September 30. You have a 50% exposure to Jamaica. Is it something that you plan to maintain in the short term, given the increased credit risk in the Latin Caribbean region due to the COVID-19 fallout, or is there plans to diversify away from Jamaica a bit? And if yes, where would it be diversifying to?
So let me answer that question this way, right? We don't structure our investments based on country risk per se. We structure our investments based on the industry that the company is in and whether or not the company is what you call a sponsored private credit portfolio company. And that terminology simply means whether or not this company is part of a large group of companies, is affiliated with a large group of companies, or has private equity backing or sponsorship, or has large shareholders who have majority stake and have significant financial resources. Why are we investing this way? Because during a crisis, a couple of things are very important. The first thing is that these type of companies actually will have excellent management teams. So take, for example, in the hospitality industry, right? Hospitality has been beaten up severely, and the recovery is not yet around the corner, right? However, there are companies in the hospitality industry that have actually made 2 or 3 acquisitions since COVID actually started in March, and actually on their 4th acquisition. Why? How has this happened? Well, it has happened because the strongest companies or the leaders in an industry, once you have a crisis like this, they are actually going to become the dominant force within that market. Because if their competitors are weak, then what's going to happen is that they are going to acquire their competitors because they have significant financial backing, right? Because if you're part of a group of companies, or you have private equity backing, or you have shareholders with substantial financial resources, then you're going to be able to actually do acquisitions during the middle of a crisis. And so this is what we are seeing right throughout our portfolio, both in terms of companies that are making acquisitions, as well as companies that are broadening their footprint. So with regards to the exposure to Jamaica, the Jamaican companies that SCI has financed, majority of them at the moment are actually looking acquisition financing. In fact, the majority of our approved pipeline are actually financing acquisitions, both in terms of Jamaican firms financing acquisitions that are outside of Jamaica, as well as Jamaican firms financing acquisitions that are inside of Jamaica. We also have Jamaican firms that are looking to expand their footprint and take market share from their competitors. Why? Because they have excellent management teams, they have the wherewithal to inject additional capital into the business if needed, and they are at the top of the food chain in terms of being leaders in their various subsectors and industries. And that is the lens through which we look at private credit investment. We don't go from top down. So we don't say Jamaica declined at an 18% contraction in GDP in June quarter, and then it had 11% contraction, so we're not going to invest in Jamaica. That's not how we do it. History has shown that during periods of crisis, the demand for flexible capital is usually at its greatest. And history has also shown, for example, during the 2008, 2009, 10 global credit crunch in the US, because there was no private credit in Jamaica at that time, that companies raised record amount of dry powder, which is what Cygnus is now trying to raise, and deploy that in the middle of the crisis. So once you basically understand, I have a philosophy of how you invest, which SCI has demonstrated in the past, then we can generate significant returns despite the fact that there are significant economic disruptions happening. So that's how we view, that's the lens through which we view all the investments that we make. And of course, we always have at least 2 or 3 ways to exit every single investment and look at risk-adjusted returns. Hope I've answered your question.
Yes, you did. Thank you very much.
Sure.
Thank you, Jason. Any more questions? One more?
I have a few more questions here online. I'll just ask the questions. Can existing USD shareholders buy GMD shares at the discounted offer of $14.70?
Excellent question. So once you're an existing shareholder as tagged by your TRN, right, Harvey? So it doesn't matter which class of shares you own, you're just an existing shareholder. Now the decision as to which class of shares you want to buy is up to you. You can buy both of them or any one of them. So there's no restriction once you're an existing shareholder.
Next question. Since the APO is at a discount as per book value, why not raise more than 22 mil?
Well, good question again. The transaction is upsizable to 32 million. So, if we see where we need to upsize the transaction to 32 million, we'll be looking to upsize the transaction to 32 million.
A follow-up to that from the same shareholder is, what is the target value interest revenue growth from the equity raise?
Okay, good question. So, see if I can answer the question. So, SCI's portfolio currently is generating a yield of 12%. The pipeline that SCI has is generating a yield of, well, let me not say how much it's generating. It's generating in and around the same kind of ballpark. So if we do a simple math, right? Let's assume that we are raising 22 million minimum and it's not upsized. On that 22 million, if you apply an 11% yield, and we're using 11% just to be conservative because I'm saying the portfolio is earning 12 and everything in the pipeline is averaging roughly the same, but let's be conservative. On that 22 million, if you apply an 11% yield on that, we would get about 77.4 thousand US dollars in revenue after you back out all the expenses. If we assume that SCI, because it now has a much bigger balance sheet, is going to increase its leverage, because currently the leverage is about 0.7 times debt to equity, and assume that we're going to increase the leverage 1-to-1, net on the 22 million, we will generate $100.8 thousand. So that means for 22 million, 22 times 100.8 thousand will give you 2.2 million, right? So we'll generate 2.2 million in net benefit going straight to the bottom line after we have invested out all of the $22 million. And that's a minimum net benefit. Because obviously we could actually utilize more leverage than 1-to-1. So I hope I've answered the question that was being asked. If not, you can have follow-up and I'll try and answer.
Next question, what's the minimum subscription amount?
Minimum subscription is 1,000 shares, so that would be 1,000 multiplied by, depending on which class of share that you're buying, and whether or not you're investing, you're existing shareholder. And increments of 100, so when you go IPO platform, it actually has the buckets that will show you if you want to buy whatever number of shares you want to buy in increments of 100. But minimum is 1,000 shares.
Okay, and the reason for raising the funds?
The reason for raising the funds are twofold. The first reason is to pay out a 10 million US dollar bridge note that SCI had to take on because the APO, which was scheduled for March 2020, had to be postponed to now because of COVID. The second and more important reason is to invest in a robust pipeline, which is currently stands at 40 million US dollars, and which just a little bit under half of that has already been approved and going through documentation process. So basically waiting on the new funds to deploy those capital.
Next question is, what is the expected increase in the stock price after the APO closes?
I can't, that's the one I can't answer, right? It's the market that will have to determine that.
And what is the level of support from institutional investors for the APO?
Okay, excellent question. So let me just back up a little bit. So if you look at SCI's shareholding, the top 10 shareholders, 8 out of the top 10 shareholders are institutional investors. 58% of SCI's overall shareholdings are actually institutional investors, which says that there is significant confidence in SCI despite the fact that it's a 3.5-year-old company. In terms of the actual APO and institutional interest, we are seeing significant interest from institutions.
All right, I'm going to open the line to, I'm sorry if I'm going to pronounce this wrong, Awa Muirhead.
Hi, good afternoon. You guys can hear me?
Good afternoon.
So in Q3, you guys raised a large sum of money, about 1.2 billion in JDOLs, but you raised it in USD, so there was a large FX loss in income statement. So I'm wondering, how do you guys plan to manage that FX risk going forward?
Okay, good question. So we have mitigated that original FX risk, which is now down to below 2.6% as of the Q1 September 2020 quarter, because that was a 34.6% exposure when we were raising that JDollar debt, and it's now down to 2.61 million and got lower after the end of the quarter. In terms of the new capital that we are raising and how we are going to mitigate against that, we have already put some structures in place with our various financing partners on how to mitigate that.
Thanks, Jason. Any more question online?
Yes. Horton Richards.
Afternoon again. There's a question with regarding to the pipeline you had made mention to. Do you guys plan to maintain both the current velocity and volume across the current pipeline in terms of your distribution of dry powder?
Good question. So let me create a little bit of context, right? So for the September quarter, we would have deployed 8.7 million, and 4 million was actually originated but not deployed before quarter end because they represented financing of acquisitions, etc., where the portfolio company would have drawn down a portion of the investment, of the money, and then right after the end of the quarter, they drew down, right? So the pipeline is 40 million, a little less than half of it already approved. Once we actually raise the capital, the origination will actually increase, because if you think about the type of period that we are in, we are seeing an unprecedented demand for private credit financing at the moment. So to answer your question, the velocity of deployment is only going to increase, and that's because of the financial environment that we are in. I mean, in the US private credit market, a record about 270 billion US has been raised by private credit companies to do exactly what we are doing. The only difference between us and them is that they are in the States and we are in the Caribbean region trying to grow this asset class. So the velocity of investments, I would say over the next 15 to 18 months, is perhaps going to be the greatest it will be, simply because of the type of environment that we are in, and in trying to exit that environment, there's going to be potential for multiple times more deals and transactions based on the companies that we have on our portfolio and the companies that we are targeting than there perhaps will be during normal times. So now is the time for SCI to actually raise financing and deploy that capital, because these are the times when you have the greatest need for flexible debt capital, which is what SCI's finance is providing to companies.
Okay, thank you. The second part of that question was in terms of volume. So do you plan to maintain the same level of investments with the increase in velocity as is anticipated?
Yeah. I mean, obviously, sometimes investment can be lumpy, because in the December quarter last year, SCI actually deployed 25 million US, right? And in this December quarter, and I guess the next quarter coming, what I've said about the approvals and the pipeline is that I've effectively said that it's going to be maintained and increase or be higher than what you have seen so far, simply because of the sheer demand for the flexible capital.
Okay, thank you.
Sure.
Okay, we'll take 2 more questions and then we'll wrap up this segment.
All right, I'm going to ask a question from a shareholder and then we'll take one from the press. You mentioned SCI being in 10 industries and 7 territories. Could you elaborate?
Yes, sure. So when I said 10 industries and 7 territories, what I mean is by industries, SCI is exposed to hospitality, mining and quarrying, telecommunication, manufacturing, distribution, construction, energy, infrastructure, what else? Financial services, and one more. And in terms of territories, 50% of the portfolio is allocated to companies from Jamaica. We also have St. Lucia, 10%. We have Cayman, which I think is 8%. We have SSS Islands, which is St. Eustatius, St. Martin. That's 17%. We have ABC, which is Aruba, Bonaire, Curacao. I don't remember what that allocation is, probably 5. I think Bahamas, and I think Barbados. So those are the 7 territories.
Thanks, Jason. We'll open to Mr. Muirhead.
Thank you. So we have one final question.
Hello? So you guys have about 60 million USD in investments right now. You've mentioned that you plan to increase the velocity and potentially the size of the investments. And you have about 50 million that you're planning to raise in both equity and debt. How soon do you expect that you'll have to raise more, given that you're increasing the size and the velocity?
Right,
so already invested 60 mil.
Excellent question. So effectively, if let's say we raise 32 million US, right, upsize, even though we have approval for 50 million, the 18 million difference, which is what we would need to raise in debt, because that's what we have approval from the board, we suspect that that money will run out, in short order, and therefore, what SCI would then do is go and raise additional debt. And I suspect that, so in essence, for 2021, SCI will pretty much just be raising debt, because SCI will effectively go and first raise debt via expanding its bank revolving credit facilities, which are about 6.5 million USD now. You probably try to triple that. So if we are successful in tripling the revolving bank credit facilities, the first thing that's going to happen after the equity runs out is we are going to use up those revolving credit facilities until that dry powder is finished. Once that is finished, then what we'll effectively do is go and issue medium-term notes, 2, 3, 4 years, and take out the revolving bank credit facilities and then reuse the revolving bank credit facilities. In terms of a number, that number will depend on the pipeline, but we are very bullish in terms of the demand that we are seeing across the region, and especially from very strong companies in Jamaica who are, on an acquisition binge. So we expect that, certainly in the next, so the revolving bank credit facilities, we would initiate those immediately after closing the APO in January, for argument's sake. And let's say, it takes us a month to get those approved. Then we would expect that within the next 2 quarters, we will be raising debt and substantial amounts of debt, which will actually benefit shareholders by generating additional income and allowing SCI to pay out additional dividends, and obviously go straight to the bottom line in terms of additional net profit.
Okay, so that's it for this segment. And for those persons who want to ask further questions on Taking Stock this evening with Kalika Reynolds, there will be a live question and answer segment immediately after the show. And of course, the show will solely be about SCI APO with Beres Gray and Jason Morris. So you can look out for that tonight at 7:50 p.m., where you have the opportunity to ask more questions. And of course, you can always reach out to any one of our lead brokers, NCB Capital Markets or Sagicor Investments, or you can contact your selling agents, Mayberry Investments Limited, Scotia Investment Limited, Proven Wealth Management, JN Fund Managers, and JMB Securities Limited. Okay, so all that's left for me to do now is to introduce Mrs. Mishka McLeod-Hines. Last time I called her Vice President, she corrected me to say that there's an A before the Vice President. I assume that means awaiting Vice President or awesome Vice President, but she will tell you what the A means. So without any further ado, I'll call upon Mishka to bring closing remarks.
Good afternoon. Good afternoon, everyone.
Good afternoon.
Thank you so much for that, Greg. All right, so good afternoon, everyone. I'm elated to be here today to witness the launch of Cygnus Credit Investments additional public offering. Sagicor Investments, once again, is happy to continue our relationship with Cygnus as we started in 2018 when we acted as lead brokers and co-arrangers to the successful IPO and are proud to have been selected once more as partners to this transaction. Cygnus is a strong company, as Jason would have mentioned before, and has greatly impacted the Caribbean region over the years with innovative alternative investment solutions for investors. With sound governance and a strategic outlook, the company has been very consistent in providing meaningful returns to its shareholders and has grown exponentially to support local and regional companies. In its only 3 years of existence, Sygnus has pioneered the alternative investment space by financing some 36 businesses across 10 industries. The company has also delivered on its promise to support regional entities and has penetrated 7 territories across the Caribbean region. Seeking to expand their capital base through this APO, it is testament of the growth achieved over the years and the opportunities that lie ahead for the company and the portfolio of investments. Our support for this APO is a signal of Sagicor Investments' overall support for Cygnus and the company's vision for expanding the private credit investment space regionally. It is also an example of Sagicor Investments' commitment to develop the economic capacity of the country while providing its citizens with the means to create, grow, and preserve their wealth. Having journeyed with Cygnus through a number of transactions over the years, we are proud to once again serve as co-lead brokers to this venture that will build the company's solid foundation and continue to contribute tremendously to the economic markets. On behalf of your partners at Sagicor Investments, let me offer our congratulations to the management of Cygnus Credit Investments for a successful 3 years and your continued growth. Thank you for always trusting Sagicor Investments as your partners to execute your novel ideas and solutions that augurs well for the betterment of your company, your shareholders, the country, and the region. We look forward to continuing our relationship with you and successfully meeting the $3.3 billion target through this offer. Thank you everyone for joining us here today in person and through the live media streams. We encourage you to contact your brokers, and Greg would have given you the list just now with the selling agents. Have a good rest of the day.
Okay, if you want to mingle around a little and ask questions, you can do that, but we have officially come to an end, and thanks again for coming out. Thank you.